Hello everyone. It's a crazy, absolutely crazy day. So I'm not gonna spend time on explaining. I'm gonna go straight into the markets. I'm gonna go straight into sharing with you the charts because data are out. So we need to discuss everything that we are seeing. This is a dollar index in a 15 minutes chart. Okay, so let me just also would like to keep an eye on the announcement. So guys, 15-minute chart for dollar. We have a bit of a late response, but it's not really that. It's because we have seen already dollar under significant pressure. I need to put the microphone closer to me. I don't know how many of you just joined the market, but there is a lot of uncertainty. There is a lot of panic. There is a lot of a lot of uncertainty. Mainly, this is not good, not going to end anytime soon. We have everything: oil, dollar under pressure, stocks under pressure, Trump tariffs, China responding with extra tariffs, OPEC. So an NFP more precisely. So this is the dollar. Okay, dollar index 15-minute chart. Actually, I'm gonna try. Let me just. Shall we put on the? I don't know where to start, to be honest. Shall I put your favorite gold? Stick to dollar for now. So in general, I'm gonna stick to the dollar for now because the news are out. So we need to discuss a bit the news. I want your comments as well. Okay, feel free to put it in the chat. I know that you're asking about gold. Just allow me a bit to see the data together. So guys, data were hard. What I mean by that? Surprise, actually nearly double of what was expected. 228,000 new jobs. This is nothing. This is actually not what the Fed wants. Clearly, it's a hard data, as I have seen it in Bloomberg, with the hourly earnings presenting a bit of a slowdown, unemployment rate higher, a bit higher, just a tick higher, 0.1% higher, but still it's higher. Okay, so, and what else? Average hourly earnings higher. So we can see that the headline has been affected, and by saying the headline, the yearly basis, we have seen the hourly earnings, as I said, a bit lower, but the unemployment higher and non-farm payrolls nearly double of what was expected. But it's also the tariffs, and the decline that we have seen in dollars so far today is more or less a combination of things. Is the tariffs, okay, the uncertainty, and there were a lot of market participants betting on a potential Fed rate cut. That's why we have seen the dollar on the flip side, on a pullback for the past actually 2 hours, more than 2 hours. What am I saying? More than 2 hours. And in general, we have these significant moves ahead of the ahead of the NFP today and ahead of the US trading session. It was all the risk of flows were all over the place. This is what is called risk of flows. This is what we have seen because it was there was an expectations for a really bad set of numbers, and I think at the end we really what we are seeing what we are seeing is us actually another
sign that labor market is not giving up easily, right? A lot of ups and downs lately, a lot of contradictory, let's say, signals for labor market. So we have seen that the dollar over here has stuck a bit. This is the 15 minutes chart, okay? The pullback is in the very short term for now. However, have in mind that due to the tariffs and the response from China, comments from Mr. Trump saying that he had a lot of proposals back, so he might consider cutting tariffs. So there is a lot of contradictions. It's a day of contradictions. From the one hand, we have the tariffs, new tariffs, that they will take effect on April 5th and April 9th, if I'm not mistaken, right? On the other side, we have seen some comments from him saying that he might consider cutting the tariffs because of some proposals that he had. But on the other side, we have China setting another extra 34% tariffs on US goods. So is it really about NFP today, or is it really about geopolitics? It smells a lot like geopolitics rather than NFP, even though NFP it was really a surprise. Okay, I know that you insist about gold, so I'm gonna get back to gold. You're right, even though I suspect that it will be a bit steady. Yes, it is, because of the contradictions that we have today. Okay, we have a lot of contradictions. This is gold. I'm gonna share. It's Friday, so sell gold. I'm not gonna say that, Ozibo. Rely on your technicals. Rely on what you see, not what you think. Okay, so that's where you need to stick today. Some are saying buying gold, some are saying sell gold. So let me put the caption on so everyone will be able to follow from what we are saying. Basically, this is gold in a 30 minutes chart. I'm gonna get rid of, sorry, these are old. That should be a much better one. So that's a past analysis. Okay, let's clear it a bit. Okay, much better. So this is where we are standing so far today. Okay, bouncing between 30.80, here we are, and 31.20 territory. But I would like to zoom to zoom in further. Basically, would like also to add my fractals as usual. Come on. Perfect. Okay, so it was more or less, that was pretty much like today's performance. It was a bit like a short-lived descending triangle. So I'm gonna, look at much better, you see. So if I just expand it a bit for you to see, so it's still like, it felt like a channel, but it's steady so far today. So what you need to keep an eye on, guys, is on this floor over here. Okay, this is, you can see clearly the volatility that we have seen the last 2 hours, 3 hours to be more precise. Let me zoom in further. Okay, in a 30 minutes chart. So We had an initial break of the channel and a return back into it. So there is no clarity, my dear friends, now. There is no clarity yet, okay? This is a 15 minutes chart. So obviously, this is still your immediate support level, considering basically based on the fact that it has not managed to break this support level for the past 1, 2, 3, 4, 5 hours in a row. Previous swing low, okay. What else? Yeah, that's pretty much it. So that the 3077 territory remains a key support level. There is some selling. Clearly, there is some selling. Stochastic is extending lower. MACD is pretty flat, so not indicative. We have the very first initial parabolic SAR at above the price, so that's raised the question marks whether we're gonna see further dip. So yeah. But as you can see, and based on the theory of Heiken Ashes, okay, it seems that this is the second consecutive bearish candle, which is it will close in 15 minutes from now, but a bearish if it close bearishly and the body is quite big, then that could indicate that decline could continue for a while. So the next support level for gold will be around 3060, yeah, 3060 and 3055 level. Basically, the next floor will be here. Whoops. Yeah, somewhere. Sorry, my bad. Not very clear, but. And if I just to get prepared a bit in a possible swing low, another swing low, a break of the 3060 level could indicate further dip down to 30 level, 3020, and so on and so forth. But this is just the intraday momentum. The intraday momentum, as I said, is looking, it presents basically a possible shift into a bearish momentum. Overall, the picture doesn't say, the outlook doesn't really change. It looking like a bit of a correction, the need of a consolidation after the new record highs. The outlook for gold is not affected from the NFP, not affected from the tariffs, since the vice versa, actually. The tariffs could provide further support to the gold. So this swing, this shift lower that we have seen is mainly on the anticipation of the NFP, on the fact that it's Friday, so there is a lot of repositioning, so on risk of flows. So let me check a bit the news, because I haven't checked from the MEF, haven't seen the breakout of NFP. So come on. So the breakout of NFP, yeah, unemployment higher, revision to K prior, changes average hourly earnings, change as well. Yeah, we have seen all this basically. This is a really solid number once again, and basically this is related with the weather. Okay, weather was poor in February, and that may have suppressed, let's say, the employment, and that's why it bounced back. It's weather. The poor weather is what maybe has boosted employment, and that's why we have seen this bounce back. Okay, the dollar. Dollar. Okay, we have a rebound in this, the 15 minutes chart. I'm gonna get back to the gold. Don't worry about it. Okay, I'm gonna get back to the gold. So the very first 15 minutes into the NFP are over. Really dodgy 15 minutes candle, as you can see. Okay, question mark. This is a reversal. Is it going to rebound? This is what this means if we use Heikenashi. Okay, the consolidation, the doji candle, especially a bullish doji candle after a pullback, implies to a possible rebound. Okay, so we need another candle in order to confirm a possible rebound. A possible rebound could basically retest the previous swing high, which is up to 102.33. This is also a sign that is supported by stochastics, in which we are seeing that we have seen a rally, right? MACD is okay. It's just flat. So okay. So still over here we have uncertainty. There is nothing clear yet in the higher time frame. So yeah, that's pretty much it. So the overall outlook, we could say, for dollar, guys, is that the overall outlook remains negative. Okay, the weekly outlook, the monthly outlook, even the quarterly outlook remains presents that dollar is expected to continue downwards. So what I mentioned earlier regarding a rebound is strictly to an intraday basis. So we were in a 15 minutes chart. Okay, so I want you to see something very, very interesting over here. Look at that looks a bit familiar, right? 1, 2, 3, 4, 5. A, B, C, D, boom. Or in a higher scale, A, B, C. Yeah, yes, correct. So it's looking like Elliott waves. But nonetheless, look at that. Look the overall outlook, the overall picture, if you prefer. That's much better. So we had a correction. This is the daily one. Okay, we have a pullback. We have a correction of the downtrend that we have seen since the beginning of the year. We have a correction, and the new down leg has started since basically officially is yesterday, okay, which we have seen this big candle. So the breakout of the previous swing low at 102.80 found a lot of sellers, a lot of pending orders, and this is when a lot of people joined the downtrend, added more to their existing trades, who knows, and we have seen the resumption, the continuation of, if you prefer, of this down leg that we have seen since the beginning of the year. So the next support level for the dollar, okay, is pretty much back in September 2024. Okay, this has broken. I'm gonna put some rectangles. This has broken, basically, right? This has also broken, which, oops, okay, it used to be a support level, and again, it was support level now as well, but it was also in 2024 broken. asset is extending lower. So the next support pretty much is down to 150 level. 150 level. This is crucial because we could see if this decline continues, we could see another a swing low, a bit of a correction before another attempt to the downside. Is it clear? So that's a very crucial level as well. Okay, very, very important. We haven't seen a move below 100 territory since 2021. Okay, so you understand how important is the 100 level territory. 100 territory. We haven't seen something like that. We haven't seen dollar drifting below 100 territory since, okay, I will be more precise, to be honest, since basically below 99 since 2023 and below 100 since 2022. Yeah, 22, my bad. So my dear friends, let's jump back to the 15 minutes chart. Okay, we have another 8 minutes to go. I'm gonna get back to gold, which is your favorite one, okay, because I can see many comments coming. And okay, 15 minutes chart, 15, okay, I repeat, 15 minutes chart, consecutive bearish candles, parabolic SAR at the top, so a negative sign. A stochastic is below 30, a bit flat. So that raises questions that we might see a bit of a consolidation at this floor, okay? But the momentum is big, actually. The candles are huge. So we might see basically further dip because the candles, even though they are 15 minutes candle, they're quite big. Can you see what's the size relative to these morning sessions, Asia session? Yeah, so they are quite big. So that's why we might see further decline down to yesterday's bottom. Okay, the body of these candles are quite significant. So it seems that there is still some further bearish pressure on gold. Yeah, okay. So what else are you asking, guys? Can you look at the repo Bitcoin? Can you do Bitcoin? I don't know where they're so exciting or not. This is Bitcoin in a 15 minutes chart. Let me just get rid of the caption. This is Bitcoin, my dear friend, in a Ziposiso, in a 15 minutes chart. We have a rebound. I'm gonna place again my Heiken-Ashi as usual. Okay, and I would like also to my fractals along with a 5 and 9 exponential moving average, which will not really help me in a 15-minute chart, but it will help me in a 30-minute chart. So just allow me. Okay, so what we have over here, that's interesting. Okay, we have bullish candles, parabolic SAR. That's a Bitcoin 15 minutes chart, guys. We have seen a change in the color. We have seen, however, we have seen change in a parabolic SAR. They are below the price. And we are seeing the 5 and 9 exponential moving average ready to cross, to bullishly cross, but we don't have a confirmation yet. And the Heiken Ashis, even though they are positive, they have a tail at the bottom, which is not a good sign yet. It's not like it doesn't give confirmation that it did. We're gonna have a rebound, okay? So question mark. Undecisive for the moment. It's not a clear. It's a bit of it's giving us mixed signals. From the one hand, we have a possible bearish cross from moving average, bullish parabolic SAR, and a bullish Heiken Ashi candles. But from the other side, the Heiken Ashi candles have a tail at the bottom, which is it shows that there is not enough strength. There is not enough momentum. Stochastic have flattened a bit. Yeah. And what else? That's pretty much it, basically. So overall, though, Bitcoin has, and very interesting, my dear friend, Sibusiso, have you noticed, I think we said it in the past, we've said it last week, it looks like a triangle, isn't it? So let me just properly set it. It should be somewhere here. We need at least three points of contact, right? So, and over here we have, no, that's not the idea. Well, somewhere here we need at least 3 points of contact. Have I put it properly? Let me check. Yes, so that's something to keep an eye on, okay? For the moment, it looks that we might see that is consolidating at the bottom of the triangle. But yeah, this will could help you as we move on. It will help you through the US session and even ahead of the weekend and ahead of the new week, basically, because it provides a ceiling and a floor. Intraday, though, we have already discussed. There are some question marks. There is no confidence, basically, that this rebound will continue. Okay, not yet, at least. Let's get back. This needs another 2 minutes to go. Let me scan the questions to see. I'm afraid, Zishan, I cannot provide signals. The regulator doesn't allow me to do something like that. But we have a signal service, okay? We have auto chartist. Feel free to check it out. It is in our website, in the tools, or visit hfm.com. And if I'm not mistaken, under the tools tab, we have the auto chartist, and it provides the signals based on technical analysis and AI basically analysis as well. So check it out. We have seen the worst of tariffs effect on the market, or more trade wars coming. Pretty much, this is the it seems that a lot of uncertainty is. We have still a lot of uncertainty ahead of us. Trump is not giving up. Remember what he did in the first time that he was president. This time, he's even more aggressive than the previous time. The fact that he didn't announce tariffs only once, he has reciprocal tariff announcements. So he's adding and adding until, guys, sorry, so sorry about that. We just have the candle close, okay? And we have a break of the 3077. So yeah, next support is is yesterday's bottom, guys. Okay, yesterday's bottom 3055. Yeah, so it was indeed the body of these candles was really big. So that is further sell off. So basically, due to that, allow me a bit. Okay, this is gold. Gold. This is gold, guys, okay? Bearish momentum continues, okay? So if the 30.55 level, let me be precise, yesterday's bottom was at 30.56. If the asset breach and breaks 30.57, which was the very next immediate support level for gold, then we could see the asset extending further lower. So let me measure the distance between 61 Fibonacci extension and 100. So it's somewhere here. Okay. Okay, so the very next immediate support levels, okay, is the 30.43 and 30.20, obviously. And for scalpers, and for our dear friends scalpers, let me check this out as well. Let me just use the latest swing. Yeah, not really helpful because yeah, it coincides. The 268.61.8 Fibonacci extension coincides with 30.56, which is the bottom of yesterday's bottom, but it doesn't help finding the next support level. Let me go in a higher scale. Yeah, 30.43 that I mentioned earlier. It takes us back to the 20th of March, that ceiling that we have seen over here. Not quite right, but around there. And the 3020 is a 100% Fibonacci extension plus a support back between 17th up to 20th of March. So, and the next one will be on this floor somewhere here, 300 to basically 3,000. Sorry, my bad, 3,000. But yeah, yeah. So put these lines on to keep yourself up to date with the next important with the next support levels. But yeah, on the break of 30.77, which was the high of the day, the next support is back on yesterday's bottom, is on yesterday's bottom, and the 30.56 level. So that's for 15 minutes chart. Please don't don't get confused. Okay, 15 minutes chart, 30 minutes chart. The overall outlook for any one of you that is a day trader, the overall outlook for gold, okay, the daily, weekly, the medium term outlook, okay, is not changing. Gold remains in a strong uptrend, okay, and the performance that we have seen the last 2 days, it looks like a correction, consolidation, whatever you want to call it, a pullback, or like a correction of this trend before another attempt to the upside, okay, because it has been overbought. Okay, so questions. My pleasure, guys. Ask me questions. I'm here for you. I'm here to help. So let me know what else you want me to cover. We touched a bit Bitcoin earlier because Zibusiso asked for it. Let me check it again, dear. Okay, this looks to be the very first candle, high Kenashi candle. Zibusiso, this is for you, okay? You ask about Bitcoin. This is a 15 minutes chart on Bitcoin. 15 minutes chart on Bitcoin. We have the very first high Kenashi without any tail at the bottom, even though we are just 5 minutes into this new candle. But we have also the bearish crossover here. Have you seen it confirmed? So that's that my Pianerli sign. We that we might see the asset extending basically to 83. Let me be precise. Sorry, my bad. We have a down leg over here, right? So 50% was already breached, a break of that. The next resistance for a 15 minutes, 5 minutes charts for scalpers, price action traders, or whatever you are. The next resistance is at 83,580. 83,580. And a very next one, if the bullish bias continues, that will be back to yesterday's peak, 84. Yeah, 84 300 level. So yeah, where's stochastics? Let me save this. Don't want to miss it. Yes, I want the 5, I want the 9. We have a 16 over here. And I would like also to add stochastics. Okay. Why is not that it? Okay. Come on. Indicators. Sorry, my bad. Just give me a second. Okay, I want it to be visible in all time frames. That's the reason. Okay, we have a bullish cross, guys. Look at that. Okay, we had bullish cross. Now it's flattened a bit, so we need to keep an eye on it. But yeah, that's for now. How is dollar is doing? How dollar is doing? Okay. Bullish, no tail at the top. Stochastic keep pointing higher. That's not promising though. The higher, okay, but it's still no tail at the top. Yeah, it seems that there is a bit of a shift on the upside, so it could be supported. We have also Mr. Powell speaking today. Is it now out? Powell speech. I don't quite remember what time he's gonna speak. I don't think he's already on his feet, but yeah, we have Mr. Powell as well today, so that's why we might see a bit of cautiousness, but that's not the case yet, my dear friends. We have done the analysis earlier for dollar. Confirmation of a rebound. Could find the next. We could see the dollar retesting the 102.30, which is the previous swing high, and a break of that could retest. Could lead further higher to 102.80. But as I mentioned, as I repeated several times during our lives, the overall outlook doesn't change. It's in a downtrend, a significant downtrend since the beginning of the year. Any correction is limited, and actually the outlook is negative with basically indicating that dollar could breach and break the $100 level. And if we see confirmed breakout of $100 territory, not dollars, sorry, 100 territory, we might see further dip and a return back to 2022 lows. These are big daily candles, significantly big daily candles. So, and if you remember what I mentioned earlier about a possible Elliott wave again, but in a downtrend. Let me just measure it. I would like to measure it actually. So let's do some measurements along with Fibonacci's. Come on. Okay, so basically we have, sorry, just a second. That was the very first wave completely rebounded. No, that's not the very first wave. That's the first one. A, B, C. Okay, C. We consider that this might be the C, the correct, the impulsive wave. We have a bit of a correction and another dip down. Actually, no, that's the biggest wave of all. Okay, sorry. 1, 2, 3, 4, 5. So that could, if we measure this latest leg, oh, nice, you see? Okay, let's assume, okay, let's assume that this is the C, sorry, A, B, C, A, B, C, A, B, C, yeah, that should be the C. So the 100 territory, interestingly, is the 100 territory that we mentioned earlier, coincides with the 100 territory. That's very interesting. So the technicals basically coincide, they all agree. Even if we check Elliott's, even if we check previous swing lows, if we check Fibonacci, we have a really, really nice agreement. And they are all in line. So that's very interesting. That's very, very interesting. So, okay, nonetheless, for now, this is the 1 hour chart, okay? We did explain the next immediate support levels. I'm not going to repeat it. But for now, and jump back into the 1 hour chart, okay? Because we have a nice channel over here that you need to keep an eye on. And why you should keep an eye on? This is the 1 hour chart for dollar index. So, overall outlook remains on a pressure with the next support level at the, come on, Andrea, 100 territory, basically 150 first and 100 territory afterwards. Intraday, though, we have a rebound. Yes, it looks like an up channel in the 1 hour chart. So you can use the channel in order to spot when the very next down leg will start. A break below, outside the channel, below the channel, that will be the very first sign that the new down leg has started. Okay? Yeah, perfect. What else? Yeah. Let me actually, let me check the questions. NASDAQ. Someone is asking about NASDAQ. Yes, sorry, my bad. I missed your NASDAQ. Guys, I cannot provide signals. I'm not allowed to. You can find in our website auto chart is download it. It's for free. Okay, it's for free. We offer it to our clients for free. Download auto chartis, and it provides you signals in any time frame that you are interested. NASDAQ. NASDAQ. This is Dow FTSE and Dow FTSE. No one asked about the yen yet. Where's my NASDAQ? Bitcoin. Where's my NASDAQ? S&P 500. Where have I? Should be somewhere here. Oh, here it is. It was in front of me. I couldn't see it. Okay, NASDAQ has been in a sell-off. It has been a sell-off the last 2 weeks, right? So, I mean, it looks like a clear trend, guys. A clear sell-off, a free fall, if I can say that. So let's check it. Okay, I know that you don't like it, but I have to start from the weekly chart, okay? Just to put some really important support and resistance levels. Obviously, is the 20,000 level and the 17,180. By basically, I need to be precise. Yeah, 17,180 level. Okay. Now, okay, that's interesting as well. But we are far away yet. You see, I'm just using the previous highs and the previous lows. Gonna zoom into the daily chart. I don't have high Kenashi over here. I have proper candlesticks, okay? Okay, perfect. Parabolics are at the top. RSI keeps pointing further on the downside. Moving average keep pointing further on the downside. It looks crystal clear to me. Parabolics are also indicating the same dip. Okay. 4 hours. Same, pretty negative. Moving average keep pointing to further downwards pressure. Yeah. Down leg, a bit of an overbought conditions, try to ease the bit, but fails to extend. You see, small body candles. This is the 1 hour chart, my dear friends. 1 hour chart. It looks like, you see, because it was overbought, we have seen a bit of a correction, but it's limited. It's limited. Bears are in control of NASDAQ, that's clear. And it seems that they are in control in every single time frame. The rebounds that we have seen intraday in 1 hour, 15 minutes chart, they look to be limited. You see, this looks that it has already run out of steam. And I'm sure if I change that into my Heikenashi template, I'm gonna probably see the same performance, like limited one. So why it doesn't take the Heikenashi one? Ooh. Come on. Where's my parabolic lizard, fractal salver? Where is my stochastic? Why it's not saved? I want it in every time frame. Perfect. Okay, guys. Yeah. 15 minutes chart. Nothing. Okay, will have been quite helpful if you could also let me know about the best time frame, the time frame that you want me to analyze. But nonetheless, that's NASDAQ in a 15 minutes chart. NASDAQ in a 15 minutes chart. What's this? This is a clear limited rebound because of overbought conditions. You can see that MACD way negative, well below zero, suggesting that overall we remain under in a downtrend, and that and this basically strengthens the indication that this rebound has already run out of steam. It was limited. How you can spot whether a rebound is limited or it has already run out of steam? How? There are several signs over here. First of all, we have seen a bearish stochastic. So that means that the rebound is over. Second, MACD well below zero. Moving average flatten, right? So there is not enough steam to continue on the upside. And quite important is the body of these candles. Can you compare these candles with this? No, they are small, they are tiny. So that raise questions, basically raise questions on whether we're gonna have a pullback anytime soon. Yeah. Okay. Overall, stocks in a free fall. I was seeing earlier Bloomberg stating that they compare today's, actually this week's and even today's session with one of the worst days back in 2020, back when the pandemic was announced, back on the pandemic year, to be more precise. And yeah, stocks, Wall Street in under significant pressure. Yeah. What was the NFP move? Was it really an NFP move? Basically, everything looked like it was pricing ahead of NFP, okay, and that tariffs have overshadowed. This is my impression, at least. It looks like tariffs and geopolitics around and the uncertainty around geopolitics has overshadowed the really solid NFP. This is my understanding, basically. There was before the NFP for the last 2 hours. That was before the NFP. This is dollar, okay? That was before the NFP. For 2 hours before the NFP, we had seen a decline because there were a lot of statements and a lot of headlines stating that it's gonna be an NFP that could boost basically Fed to cut rates. So ahead of the NFP, we had this selling, but still, this for if we're considering the day session, the session of the day, it's not the usual volatility that we are usually seeing in NFP, especially if we have such a big surprise like today's. So it seems that Trump, his tariffs, China's response, his obsession with TikTok, and in general all these tariff-related news have overshadowed a bit NFP. Okay, so guys, it's a very difficult year. Basically, you need to rely, because there are a lot of things going on. It was OPEC as well. We haven't touched this topic at all. We had OPEC with Brent and oil under pressure. We had consecutive announcements from the US administration. We had the response from China just earlier. This happened just today before the US Open. So we had a lot of, well, I forgot where I wanted to what I wanted to say. So okay, yes. So because of all these announcements from officials, responses to tariffs, reciprocal tariffs, because of all this, try and rely on your technicals, and always prepare. So put your trigger points, put your support levels. You are not a single support level, find multiple ones, your resistance levels, everything, in order to be well prepared, and in order to spot on time a possible breakout. Okay, so rely on what you see and not what you think, because if we are today, if people state that okay, NFP, it was double of what was expected, we had a big surprise, so dollar should go up, I mean, on the announcement. But okay, it did went up, but just tiny, just a bit, just the very first 15 minutes, which is nothing, and it was just a few pips, really. So don't trade what you think. Okay, trade what you actually see, whether you've seen a breakout on a key support level, resistance level, a big bullish or big bearish candle. Rely on your strategy. Do your homework, especially for those of you that trading the news. Okay, so which is the best between long trades on a 3-day or short trades, let's say 5 minutes on gold? My dear friend, there is not a best or a worst time frame, either for gold or for any other asset. Is you the question? The answer is, what are you? What kind of trader are you? Are you one that is really stressful in trading a 5 minutes chart? You're risking your own money, right? You're risking the money that you saved for trading. So what's your emotions? How do you feel when you're trading in a 5 minutes chart? If you're getting too stressed, too anxious, you get obsessed, and you're doing like, you're shifting your stop and loss higher or lower, whatever, in order something to keep you in the market, then this is not for you, or you are not ready to trade in a 5 minutes chart. A higher time frame, a day trading, for example, is a less stressful one, and it's mainly for people that they don't have a lot of time to spend in the market every day. They might have just an hour in the morning before they go to work, so they are more of a medium term traders, day traders, etc. So the question is you, okay, what kind of trader you are, what you like to trade, what you understand mostly. Do you understand metals, the fundamentals on metals? Do you understand the fundamentals on Forex? On Forex. So it's you need to find out what's best for you and your psychology and your style, your character. You need to find out what's best for you. You cannot do everything. Over here, I try to present as many time frames I can, because you're too many. You have different approaches. You're trading in different time frames. So I'm trying to cover as much as I can. But you need to find out yourself. You to find yourself, basically, as a trader, and it's not easy. So if you haven't found it already, get back in the demo account and test in order to settle in a strategy. Find what suits you, what doesn't, what you understand, what doesn't, and so on and so forth. 70 minutes, 75 minutes. Thank you for pointing that out, Stephen. Can you share your days on? Guppy. I guess you're referring to pound, right? So it was okay. Actually, these are some analysis that I did in the past. So ignore this one. Don't ignore the rest. The rest are just fine. And I want you to. So, okay. Yeah, so basically we had, because of the dollar weakness this year, we have seen pound, euro benefiting. Okay, so so far today, we have seen a pound basically under pressure. But because I analyzed pound for the day, I would like to I want to explain to you these levels that I have in the daily term, because they are important. Okay, so currently and basically the whole March, the guppy, the pound, it was in a ranging market. And finally, on Wednesday, we have an exit from the ranging market that we have seen nearly the whole March. That was significant, a very strong bullish sign. Why? It was an exit of a 1 month ranging market, also coincides with the breakout of 123% Fibonacci expansion on this latest leg that we have seen in December, a breakout of 138% as well, okay? And because these levels are so important, that's why on a Friday, which is the end of the week, we have a significant correction, okay? We have a pullback. However, the asset still holds above the ranging market that we have seen and above the 130 level. 130 level is a super important level. It's a psychological level for pound. It's a 000 level. It's a very strong level in general. So it's very important for us to see whether today it's going to sustain, it's going to hold above 130. I'm going to zoom into the 30 minutes chart, okay? To the 4-hour chart, sorry. It will be very important for us to see tonight, basically, once the market closes, whether cable will manage to sustain a move above the 130. This is something that I would like you to keep an eye on tonight once the market closes. Okay, it's very important for you to be well prepared for Monday morning, for the Asia session more precisely. So that's the one thing. Overall, the outlook remains positive. Okay, it remains in a rally. MACD is positive. RSI, it holds above 50, has some ups and downs, but it hasn't crossed below 50 since the beginning of February. Okay. What else? Yeah. So, okay, that's for Monday. The continuation of this uptrend is still on, and these are the next support levels as soon as we see the continuation upwards. Now, intraday now, as I said, we had a pullback. For now, this is the 1-hour chart, dear Stephen. This is the 1-hour chart. It's consolidating. there is not enough clarity over here. Let me also use my 30 minutes chart. MACD remains negative. Stochastic points downwards. Moving average are flat. So there is a lot of indecision, I'm afraid, intraday for GBP, for pound dollar. So let me try something else. So yeah, it's in a consolidation mode. Yeah, there is no clarity, but let me save my profile so I could keep all this analysis for next time. And I'm gonna shift. I'm gonna shift into Heiken analysis to see whether we are getting the same signs, the same signals, basically. Yes, okay. Now I'm gonna change template. I'm gonna use Haikenashi. Is the Haikenashi presenting anything different? No. Consolidation, I'm afraid they are stiffened. So put basically keep an eye on the of the candles. I mean, there is a lot of indecision right now. So yeah, there's no clarity. I'm afraid I cannot really understand the next possible move because I have mixed signals over here. From one hand, the overall trend is still an uptrend. On the flip side, sorry, that's a very wrong. Okay, on the flip side, so you see it's a nice uptrend. On the flip side, we had a lot of weakness today. So for now, it's just consolidating, just hovering around 130 levels. So yeah, I'm afraid I don't see anything interesting, at least in the very, very short time frame. You can keep an eye on it. You can, I mean, check the body of the candles, whether we're gonna, okay, we had a bearish Haikenashi candle over here, indeed, with no tail at the top, but it didn't really it hasn't really broken the previous tails, you see. Yeah, no, I'm afraid I'm really sorry. I cannot really see anything helpful, just consolidation intraday. But it's very important for all of you guys to keep an eye on whether it will manage to close tonight below 130 or not. Okay. Thank you very much, top below that. Sorry. Dollar again. My bad. I'm trying to run back. It's not as easy. Sorry. Okay. Have another one on. Okay. Now, dollar again. Okay, it has been in a free fall. It has been in a sharp decline the whole week. Okay. So this is not so helpful. Let me just clear all this mess. Okay. Let me clear all this mess. That's helpful. Okay. And I would like also just a second, dear Zibusis. Just a second to fix my template because I don't like it. It doesn't satisfy the moving average are not giving me nice. I mean, no, too late. So I'm gonna put also 21. Possibly this is maybe too late. They're giving the signals that they give me, they're too late basically. So I'm gonna change into this one. This should be, let me try that. No, 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 no. Okay, the exponential linear weighted. Let me use the linear weighted to see. Okay, not necessarily bad, not great either. Okay, but much better than before. Okay, so, okay, that's much better. I use for the daily chart, I use linear weighted moving average 20 and 50. I have a bearish cross of the 20. Okay, I had basically a bearish cross back on the 31st of January of the 20 below the 50. They came close to each other over here because of this rally, and now it seems that they get white, and again not enough. um, but what matters basically is this sell-off that we have seen yesterday extending to another low today. Okay, very interesting. So the next, so so can you see that it broken two swing lows? So that was a nice support level. This is a weekly chart just to find the next significant area of support. 1 2 1 2 is not an M formation. It's look like more of a head and shoulders. First shoulder. No, 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 that's way higher. No, ignore me, it's not the head and shoulders either. But definitely the 141 140 level, it's a very important support level for, I'm in a higher time frame, guys. Okay, I'm in a I'm just checking the overall outlook for the rest of the quarter. Okay, we enter a new quarter, remember? So I'm gonna keep this line on for next time. Sell off momentum is ready to turn negative in the weekly chart. RSI keep pointing points lower, is our 37 and keep points lower, so overall picture remains a negative. Now I would like also bam bam bam. Okay, I don't need it, I'm gonna delete it. Okay, now daily one, down, another leg down, momentum remains negative, RSI keeps pointing lower, so there is further room on the downside. Let's shift to the 4-hour chart. Momentum is really, really negative. It consolidated for a while. It looks that is ready to break. Okay, let me get rid. Okay, sorry. A bit. Okay. It looks that is ready to continue. Okay. Okay, guys, overall the outlook in a higher time frame or even intraday is negative. However, there is not, it didn't, they didn't break basically. We don't have a confirmed breakout yet. Okay, we don't have confirmation. We need in the 1-hour chart at least and decisive, and by saying decisive we need like a quite strong hourly candle, bearish one obviously, closing below 145 in order to suggest that doors are open for further dip, for a continuation of this drift. Okay, but overall fundamentals are supporting further weakness for dollar yen. Now I'm gonna shift back to the Heikenashi template and see what's going on intraday. Yeah, so some consolidation. Yes. So we have seen a bit of a side movements. We don't have yet confirmation that it will continue. Basically, we don't have a trigger point. Overall, the outlook is negative. Fundamental support further decline for dollar yen, but intraday is consolidating. We need a decisive move, strong bearish candle below 145 in order to suggest that we might see further decline today and a return back to yesterday's and today's bottom, let's say today's bottom. So yeah, pound now, buy pound now. DJ, I don't know what you're talking about, but okay, it's up to you. You might be in a 1 minute. You might be, I don't know what kind of trader you are. Yeah, it wasn't much volatile. What I said, Lindor, I feel that tariffs have overshadowed the solid and surprising NFP. Can we get back to gold? Do we have anything new? Yeah, just continue downwards. Fresher, we've seen gold earlier, and we did say that it was significant to see, was before it break the 3077 basically, and we mentioned that if we see a move below the previous swing low, which was the 3077, we might see further dip and possible a retest of 3056, which was yesterday's lows. So it already retested it. Not okay. It was really close to it. Yeah, but yeah, the intraday, and this is not even intraday, this 15-minute chart in the very short time frame. We are seeing that the momentum, there is an increasing bearish momentum in gold. Look, the body of these candles. Okay, this is what matters. The stochastic over here, let me just, yeah, the stochastic, you need to keep, this is a 30-minute chart, okay? You need to keep an eye on the stochastic. It's in the oversold territory, but we don't have a bullish cross yet or a move above 20. A move above 20 is the one that will help you figuring out that this decline has run out of steam and it has ended. Okay, use your indicators, lock some profits, don't get greedy. Okay, so what else, guys? I'm run out of steam. I think I'm gonna call it a day soon. Dear Johan, I'm sorry that you joined us quite late. The NFP was really a surprise, an upward surprise. It was a really solid number, indicating that the weather, it was the one that supported the employment, and actually it has suppressed employment. But the NFP was a bit overshadowed. The tariffs overshadow NFP. That's why we don't have seen the volatility that we usually see in NFP, and we don't have also a significant support of dollar overall. So strong NFP theoretically should support dollar, okay? But this is not what happened, okay? So they should theoretically support dollar because they could delay further the rate cuts. But this is not what happened. We have seen the dollar being under pressure 2 hours before the NFP. And once the NFP was out, we have seen it a bit supported a bit. It's all about the tariffs, I'm afraid. It wasn't so much about the NFP. We are seeing some corrections so far today, actually since yesterday night, but it could be limited. The very next ceiling, if of course this It looks very weak, rebound. Sorry, okay, it looks really weak. But if for any reason we've seen that the rebound continues, we have a really strong ceiling at 102.33, coinciding with a swing high, my previous swing highs and the upper of the channel. So yeah, if it fails to extend above 102.30, then we might see a return back into the channel down to 101.50 and so on and so forth. Okay, overall remains under pressure, it's in a free fall, so follow the trend, isn't what they say? And it's absolutely true. Yeah, so thank you guys very much. I think I'm gonna call it a date. Okay, I'm gonna scan up in my newsfeed just to make sure that there is nothing that I've missed telling you. Unfortunately, yeah, the jobs basically overshadow, as I said repeatedly. It looks that Trump's trade war dominates the market. Let me see whether there is anything. Just we haven't touched euro. Before I call it a date, I will just, yeah, it's well supported basically. So sorry, what I was saying. Yeah, so I want you to understand something. Why tariffs affect so much the markets? Because they threat the global economy, they threat the global growth. Okay, that's why, and they create a really they create risk conditions in the market that the risk appetite basically in the market. This is what they create. That's why you need to keep an eye on them. And that's why you need to rely also on your technicals, on what you see and not what you think, as we keep saying. Uncertainty is not going to end anytime soon, especially with Mr. Trump as as a president of the United States. So dollar yen, because you are the one that asked for dollar yen earlier. Who was it? I forgot, guys. It was Jibosiso. It's just really caught between immediate support and resistance levels, so quite neutral for now. We have seen gold, it's under pressure. S&P and in general the stocks are under pressure. The major indices are under pressure. We have more than 3% down for S&P, if I'm not mistaken. What else? We haven't touched oil. No one asked for it, but it was in a sell-off today, guys. Okay, I'm gonna finish with oil. Come on. Yeah, it was in a free fall. Look at this. And it seems that there is further room to the downside for Brent, for UK oil, for US oil. Look at that. Ooh, boom, boom. I don't know whether you're trading gold or oil or not, but it broken broken a support that we had since 2021, if I'm not mistaken. So yeah, that was due to the OPEC. So I'm gonna call it a date Thank you very much for attending. I hope you're having a great day ahead. Take care. Get well prepared for the new week, guys. It's very, very important to do some homework, to put your support and resistance levels, trigger points, alerts, whatever you want, whatever you find easier. Get well prepared because we might see Mr. Trump announcing further or making some comments, aggressive comments over the weekend or even tonight. Be very careful. Thank you very much. Have a great weekend ahead and see you again next week. Bye bye.